In today's video, we are going to be talking about and breaking down the BMO US Dividend ETF. This is a fantastic ETF if you're looking for dividend payouts, and its ticker symbol is ZDY. Now, this is a Canadian ETF, and it does hold American companies, and those companies pay dividends. Now, really quickly, just to dispel any questions at all, really quickly, because it's a Canadian dividend ETF, even though it holds American companies and American dividends come in, because it's a Canadian ETF, you don't have to worry about withholding tax from the USA. But if you do want a quick tip on American dividends for other reasons, not this ETF, but if you hold American companies, a really quick tip for you is to hold them in an RRSP if you're Canadian, because the RRSP has an actual tax treaty with the USA so that you don't have to pay the withholding tax. So just keep that in mind. It's actually quite interesting. Anyways, let's break down this ETF. So at the time of recording this video, it is a $31.82 stock. Its average trading volume is roughly around that 9,000 to 10,000 shares traded per day range, and that does mean that it's not a great ETF to day trade, but generally speaking, you're not going to be day trading ETFs anyways. From there, its yield currently is 3.4%, and its MER is 0.3%. So for example, if you had $100 in this ETF, you would be then paying 30 cents every single year out of that $100 that you initially put in. So keep that in mind. That is just something that happens with ETFs and mutual funds, but ETFs are generally cheaper than mutual funds. And 0.3% isn't terrible anyways. Now, the one reason why I really do like this ETF is the fact that it has a very good track record for growing your underlying value. That is why I am willing to pay that 0.3% per share for this ETF, because of the nice growth that it does have. 5 years ago, for example, it was at $25 per share. It's currently sitting at $32, and that's only within about 4-year period. Of course, I should say probably around $33 or so, currently trading at $32. Of course, there was that big downturn due to COVID. Now, when we really look at this, it's had a good bounce back, but just like the rest of the stock market, it should be back up to its all-time high, but it's not. It's actually quite lower. So that's the only real piece that kind of gets us really thinking, is this actually a good ETF? But in my opinion, for what it holds, the companies that it holds, this is actually a good discount to where it should be, and I could even see a quick $1 or $2 per share being made over the next couple of months, even though that's not a ton of income, or at least a ton of equity growth. At the same time, you're making that 3+% dividend. And then we can look down and see the actual companies that it holds. And I like banks. If you are just new at watching me, I am a massive fan of banks. And of course, this does hold multiple banks. And that's good. We also have Apple, and Apple is a favorite of mine, and same as Johnson & Johnson. Coca-Cola is not one of my favorites. It's something that I may invest in someday. I do hold it in a couple of ETFs. But at the same time, Warren Buffett really loves Coke. Microsoft is another great company for dividend and tech, as well as underlying value growth. I'm just not a big fan of Microsoft and the way they operate their business, but that's just me personally, so I personally just don't buy into Microsoft unless it's just somehow magically in an ETF. Walmart and Amazon's not in the top 10 of this ETF, but Walmart is, and Walmart is, of course, the golden child of the stock market. And of course, I personally think that Walmart has a lot of growth. It's going to be Walmart and Amazon probably most likely in the future. The really nice thing that I like about this ETF is the fact that it does pay a very similar dividend every single month. Now, as we can see here, there are a few months that we can look at and say, wow, there was actually a nice bonus dividend that we got to see. So we have February 26th of 2020 as well as December 27th of 2019. And both of those months, they got paid out a 20-cent dividend versus the average of the time of around 8 or 9 cents per share. And it's still sitting every month at between 8 and 9 cents per share. Is there going to be dividend growth into the future? It's hard to say because, of course, we are looking at about 2.5 years worth of dividends, and there is not that much growth unless you look at those 2 months. And then if you actually look back and look at the news during those months, it was because a lot of companies were giving special dividends because of some of the tax cuts. So just keep that in mind whenever you look at a dividend ETF and say, oh, hey, there's that 1 month that's really good. Maybe it'll happen in the future. Well, unless there's another Trump, I really doubt there's going to be another month like that. But who knows? Anyways, my thoughts on this ETF are that it's a great ETF if you want some steady growth over the next couple of years, if not longer, and you want a nice steady dividend every single month. This is definitely a very good ETF, especially if you're looking to get some US exposure from Canada. This is definitely a fantastic ETF. Now, really quickly, myself or my family currently do not own any shares in this ETF. We are currently thinking about it, but we do not at this time. I hope that you've enjoyed today's video. Remember, these videos are just for education to give you ideas about your portfolio. Never trust a random person on the internet. Do your own research, and I will see you guys again next time.